think you need kind of a robust downstream demand to support the investment, and the best policies that we've seen are upfront incentives for electric vehicles. Where those have been brought in, penetration rates have risen very quickly.
We do see a lot of the largest investments, the largest equity investments in recent weeks and months from mining companies or companies that are involved in the mining industry but outside of lithium completely, and wanting a piece of that action.
It's partially about environment and reducing emissions, particularly in some of these countries like China, but it's also about positioning the company for this next phase of industrialisation in a way.
China's very good at starting in an industry and gradually expanding and effectively controlling that industry. So you talked about rare earths before, so look at rare earths, refining and separation, then moving into magnets, then moving into motors. This is what China does incredibly well.
Okay, and so just as a short introduction, I'd like to thank everyone for joining in this Assay Live webinar today, looking at the battery materials. Joining us today, we have Harry Fisher, Senior Analyst for Battery Metals at CRU, Paul Locke, Managing Director at Pan Asia Metals Limited, Cameron Perks, Senior Analyst for Benchmark Mineral Intelligence, and James Stewart, Natural Resources Portfolio Manager, Mining Equity Analyst at Ausbil Investment Management. So thanks everyone for joining us today.
Good to be here.
And I think a good place to kick us off is to look at kind of one of the broader issues in the market today. So analysts have been warning that we're due for a deficit in some of the key battery metals and materials in the coming years if investment and exploration don't grow. So how can we start to ensure that we have enough supply of these critical battery metals to help meet the growth of demand in the coming years? So maybe Harry, you're in my top corner if you want to kick us off.
Yeah, sure. Yeah, so that's right. We're expecting kind of fairly substantial deficits to open up particularly for lithium and cobalt over the midterm. So we're definitely going to need to see further investment on kind of both the mining end and through refining to ensure that we kind of don't see unsustainable deficits opening up. We've got fairly supportive price levels at the moment for both cobalt and lithium particularly, and that's definitely enough to incentivize new supply, and we're starting to see some kind of early signs of investment in those markets. For cobalt, we saw early this year, we saw a major investment by CMOC in the Tenke Fungurume operation in the DRC, so doubling their output there. And on the lithium side, we're starting to see new capacity coming on, also restarts of idled operations, particularly in Australia from the kind of likes of Greenbushes and Wodgina and the ex-Altura asset. So that's definitely a good sign for further supply growth to support the kind of the boom and demand that we've seen last year, but particularly this year. Demand just going from strength to strength, and we expect that to continue.
I agree with Harry. Largely, the market is speaking for itself. I mean, with lithium prices where they are, and the other battery metal prices where they are, that's just going to help fill the hole. But I do think there's a problem with early stage investment, particularly when projects get towards the pre-feasibility study. Are investors really willing to stump up at that point? And there's quite a large, I've been called it a taxi rank of projects out there which are capital starved at the moment.
So I might jump in as well if it's okay. So I completely agree. This is the same as a lot of commodities where you see underinvestment followed by an aggressive rally in pricing, which then incentivizes new investment in projects. The problem we've had historically is, yes, there's some projects that have been mothballed and idled, but there hasn't been investment in new projects over the last few years. So we do have a situation now where there is a crunch pushing very high prices through the lithium market at the moment, but that can be solved with again, investment in the space. our view at Ausbil is if you look across the lithium market, lithium mines generally can be brought online fairly quickly when you think about the mining industry. So when I mean quickly, it's call it 2 or 3 years versus other commodities, which can take much longer. So there is the ability to respond, but it's all driven by pricing, which obviously drives economics. And then you need to see investors actually coming to the space and writing checks for these projects. We haven't seen the automotive manufacturers, we haven't seen the battery producers ex-China investing in projects yet. So someone needs to fund these projects, and at these sort of prices, there's the incentive there to make them happen.
James makes a good point there. The lithium companies responding, you might recall that PLS got its DFS in place in just over 2 years. It was a pretty stellar effort, and I think there's a couple of hard rock miners out there which can do that. I'm not so sure about the brines though. It's a bit harder.
Yeah, sorry, Paul, I agree.
And so I suppose, where is that investment going to come from? Are there, and I suppose what's going to encourage that investment?
Well, I think at the moment, at the pre-feasibility stage, as in you're still drilling, that's only going to come from, may come from some aggressive investors from downstream, but mainly the investor market. But what was pretty interesting recently was Cattle's investment into AVZ, which was reasonably large. And I think Cattle also took out, was it Millennial Lithium?
Millennial Lithium.
Yeah, that's right. So, I mean, both at feasibility stage, but big licks of cash. So it is showing that the downstream market's heading upstream to secure supply.
Yeah, and we also saw that for Cobalt as well in the DRC. CATL invested in the Kisanfu project. So it's interesting to see that those downstream players are looking upstream to secure supply for the midterm, and I think that really reinforces that there is an expectation that tight market conditions will persist and probably worsen, and particularly if there's a lag in that investment that doesn't quite keep pace. I think the other point to make on price levels is that they're sufficient at the moment, but they need to be sustainable. I think many investors are still burnt from kind of the previous years where we've seen big peaks in lithium and cobalt prices and then kind of a subsequent crash, because we haven't quite had the downstream demand to support that kind of price and investment. But I think that's changed now. There's definitely enough momentum in the downstream, particularly from electric vehicles, to support significant investment. And I think that the lithium spike at the minute probably isn't where it should be, and I don't think that's really going to help. But I think we need to see some steady prices consistently to ensure people kind of continue to invest.
If you look back at like 2018 or 2019, the market penetration rate for PEVs was something like 2% or less. In 2017 it was 1%. We were talking less than 1% prior to that, and now we're just in this completely different demand scenario in 2021 with between 6 and 8% market penetration, and even if you're being conservative, which I think benchmark is mostly on the EV penetration rates, that we're forecasting between I think the 26 to 36% or so by 2030. We don't see a possibility. There's a very, very remote possibility that there will be a balanced market before 2030. I would be interested to know, and I had a question what James meant when he said that lithium mines can come online a bit quicker than other mines in 2 to 3 years. And potentially it's not my experience, but what would you mean? You mean in the later stages or in the early stages? And do you mean like in terms of qualification, like ramping up and that sort of thing?
So I just from that, I'd sort of term construction into production in call it 2 years. So if you look at Pilgrim, yes, there was some issues around ramp up. Altura, same thing. Bald Hill was a 12-month ramp up. So spodumene projects tend to be able to start and ramp up relatively quickly. Downstream, a lot more difficult, completely agree. But there is the actual mines, it's a relatively simple mining process, and assuming you're using simple processing, DMS, etc., it can be a reasonably quick startup compared to Paul's point, brine, which is 4 or 5 years by the time you go through evaporation into production into qualification. So there is the response that can come through for spodumene concentrate. Yes, downstream's a lot more difficult, and completely agree, brines are harder. Just on the funding side, and again, just touching on a couple of points if it's okay. So the funding side, it's interesting. We are only really seeing investment from China at the moment. So if we look at the investment, and we can go back to Bacanora being taken out by Ganfeng recently, we can look at AVZ with cattle, as Paul mentioned, the 5-inch again investment from Ganfeng. The Chinese are very active. Millennial Lithium, again an active bidding process of China versus China, very unusual. So the investment is coming through from China at the moment. Where's the investment from the Western producers? So where's the SK? Where's the LG network? LG? Where's the OEMs in terms of the auto manufacturers in the Western world? We're not seeing that investment come through. So it's interesting at the moment that we see a land grab from China, but we're not necessarily seeing a response from the rest of the world.
And if I may jump in, James makes an interesting point on investing. Last time round, and when PLS was looking to raise its project capital, and it was a pretty small spend, really, the banks didn't step in, and we really haven't seen banks step in yet. And I think Harry made the point on the lithium spike, so I assume that you're meaning this lithium spike is too high. But it'll be interesting to see if the banks step up and provide debt funding to any projects over the next 12 to 18 months, or whether they hold back and this has got to be funded with, sub debt and equity, or OEM partners, i.e. cattle.
So, actually, before we continue, I just want to make a note for the audience and everyone listening in that we are going to start accepting questions from you. If you have questions throughout this webinar, please feel free to type them into the Q&A box, and we'll take them as we go. But just to continue on with this discussion, so we've seen a lot of serious disruptions to supply chains, and I suppose a growing interest from the OEMs to get into this into battery production. We're seeing more kind of regionalized or national supply chains. What do you think are some of the lasting impacts of this? Are the OEMs really in a space where they can, I suppose, get involved at the battery level or the mining level? What do you see in terms of this involvement?
I might jump in. Well, I think what Tesla's doing, putting its foot on nickel, says it all. So it's going all the way to mining to secure supply. So the OEMs are getting involved, or some of them, but I would think Tesla is the most aggressive of the OEMs at this point, and they're probably the largest producer anyway.
I'd agree, and I'm sure all the gentlemen on this panel have spoken to VW, who tends to be the figurehead for electric vehicles, and how many years have we heard VW talking about potentially making investment or potentially supporting projects, but we haven't seen dollars hit the ground yet. My view is it's a very different market to be able to mine and produce a battery as opposed to assembling a vehicle. And I don't really think, ex-Tesla, to Paul's point, I don't think the rest of the OEMs necessarily have their mind around it. So it's going to be interesting to see how this plays out, because again, Tesla is making sure they have certainty of supply. The other producers yet to see.
But I think sorry, go ahead, Cameron.
I was just going to add that, and before we get too far away from where's the money going to come from, and it's a related discussion, I guess, we do see a lot of the largest investments, the largest equity investments in recent weeks and months from mining companies or companies that are involved in the mining industry, but outside of lithium completely, and wanting a piece of that action. And I know a lot of the few of the companies that we speak to here in our consulting division are companies that want to make that transition away from coal or something other energy into lithium and see how they can make an impact and transition their business. So that may be one space, an interesting one.
That's an
I'd
interesting
agree.
point, Cameron.
I'm seeing similar themes from players in the market.
Yeah.
Just on kind of the how OEMs are responding. I think that there's been, even in the last 6 months, there's been some huge kind of moves by the OEMs, particularly in Europe and North America, to commit to battery capacity or gigafactories to support the rollout of the of EVs in those markets. But I think the real gap is in the upstream, where the raw material is going to come from. I think we're increasingly going to see regionalization of these supply chains to enable raw materials to be closer to the end users, because ultimately the batteries need to be close to the EVs. They can't be all shipped from China or South Korea and Japan. At the moment, the majority of lithium and cobalt refining is done in China, with little bits here and there, but it's mostly in China, and then all of that would need to come to go to Europe and North America to support those battery plans. So for me, the regionalization of those supply chains is kind of a key issue, and we need to see, going back to the investment, we need to see greater investment in those markets to enable those battery plans. Otherwise, potentially those EV rollouts, and we're seeing fairly ambitious targets from many of the OEMs, they potentially could be at risk if they don't have enough raw material supply.
So Harry, on that, are you talking that there are a lot of battery plants going up in Europe, but you're really talking about CAM and NCM supply, and is it going to be a bit like rare earths, where China really has its foot on the lion's share of production, and Cattle's move into AVZ, and Millennial probably says that that players there are trying to lock up supply and secure their market position. Do you think that where the market generally is at risk of that happening, and a similar position such as rare earths happening?
I think it's not just the PCAM and CAM. I think it's also the kind of the refined cobalt, lithium, and even the mining end. Europe and North America have got very little of those raw materials at the moment. Cobalt's dominated effectively by the DRC and Indonesia. Lithium's dominated by Australia and South America. So there's not enough raw material production in those markets to support the battery production that we're going to see over the next 5, 10, 15 years. It's as simple as that. There will be enough kind of via China, but is that really a kind of a long-term solution, kind of in supply chain terms, but also when you look at the ESG angle, is that sustainable from an ESG angle as well?
I think from our side, the supply chain thematic at the moment is front of mind for everyone, and Paul touched on rare earths concerns around China. The question comes down to what sort of price is a country or market prepared to pay for certainty of supply. So if you think about the US market, from our perspective, if you want to produce lithium in the US market, you're really focusing on clays, which are probably top end of the cost curve at the moment, at least. We'll see in time, but top end of the cost curve from OPEX and CAPEX. So to secure your supply chain, are you prepared to pay that price? And we're not really convinced at the moment. You really have to segregate supply chains. Markets have to be prepared to pay a premium for some products, which I'm not convinced that the market will, but we'll see.
Or I suppose the alternative is, do you just go to the refining side and you import your spodumene or your brines, and then you refine locally close to your PCAM and CAM. And I think the same for cobalt. Say in Europe, you could easily import your hydroxide from the DRC and refine it locally rather than it going DRC, China, Europe. There's a few obviously there needs to be an incentive price there, but there's a couple of kind of geopolitical and ESG considerations as well that are becoming increasingly important.
So we have a few questions that have started to come in, all looking at supply chain. So I'll just read a few of them out and then we can discuss. So One of them asked, should the West be more concerned about the resilience of EV supply chains, given the concentration of mining in key areas and production dominated by China? We also have kind of a question saying, the supply chain issue is not just about ESG. Americans and reaching out to and over Australia are worried about supply for tech. So it's really kind of looking at you know, what is the story in terms of the supply chains if China is continuing to dominate? That also comes in with the investment side of things.
I think James and Harry, touched on this. If you know, the US wants to secure its supply chain, and they want that to be internal or internalize it, then they have to be prepared to stump up. And if your projects are sitting at the top end of the cost curve, perhaps in today's environment, right now it's fine. Most projects will be economic, but how long will that last for? Once the supply gap is filled, where will the price finish at? And are governments really willing to underwrite a project, a loss maker for the long term to secure that supply? And history says no. There's no long-term thinking like that in the policy environment, at least.
I think today we're obviously focusing on batteries and battery materials, but if you go back over history, China's very good at starting in an industry and gradually expanding and effectively controlling that industry. So you talked about rare earths before, so look at rare earths, refining and separation, then moving into magnets, then moving into motors. This is what China does incredibly well. You can go back to the steel industry, you can go back through Ali. It's what China does well. And why do they do that well? Because they have the risk capital available and a longer time frame probably to most investors in the West, which changes what they're prepared to pursue. I do believe that the West should be concerned about long-term supply of raw materials, because China is locking up a large portion of the supply. Now, what does that mean in time? It probably means that China continues to push down into more value-added components and tries to capture market, but the response from the rest of the world is yet to be seen.
We have a number of questions kind of revolving around ESG as it relates to investment into the space. Some of the questions that we got from the audience in advance were asking, you know, what's holding investors back from advancing junior mining projects with good ESG credentials? What types of ESG risks are investors willing to accept in order to ramp up materials supply? And then also just kind of asking, you know, how real are these ESG considerations? So I won't read this whole question, but really kind of looking at considerations about where you get your materials from, whether it's China or you know, cobalt in the DRC. How do people kind of gauge these considerations?
From an exploration perspective, I think the S&G are absolutely critical, and it's not hard to deliver on your social and governance. I mean, they're so simple, really. On the environment, that's a difficult one, because if there is a supply gap to fill, you've got to weigh up the benefits against some of the costs. So you can bring into play all of the best mining techniques, best operational ways to go about things. You know, if you need a tailings dam, the best way to manage it. But there will be an impact, and that can't be avoided if you want to offset or grow the EV market and offset carbon. So I think there's got to be some give on environment to a point. I'm not saying that you go and smash everything up, but that's the way I see it.
Well, I think it's essential that, of course, as we build out a renewable economy, that we need to use other sources of energy. Oil and gas is really suffering from investment, or look, oil and gas in that industry, and not investment, but in terms of share price and this sort of thing. Like, investors aren't really looking at oil and gas, but there is a big need for those conventional energy sources. And I think while this whole movement is driven by, seems to be EV at the moment, and that's driven by government mandated emission standards and science, the beggars can't be choosers. And if we want to build electric vehicles, right now you have to get your lithium really processed in China, where emissions standard or transparency is not as good as elsewhere, and emissions when we're looking at spodumene are higher than brine. Look, but there are technological solutions, and how much are you willing to pay for those technological solutions? You could look at the cement industry and see, look at what they're doing there. So there are things that we could be doing to reduce emissions, but it's going to cost, and it's going to, someone has to pay for it. Just wanted to add that.
I think, is the ESG side real? I would absolutely say yes, and the key market that we sort of look to there is Europe. So you look at Europe's doing around their battery market. There's a few moving parts behind it, but effectively what they're trying to do is encourage production of batteries, manufacturing of batteries and raw materials internally in Europe. Now that reduces transportation emissions, that reduces the risks around, again, the environmental side. To Paul's point, you're mining in a first world jurisdiction as opposed to a possibly less focused regime. So there is a huge push towards this ESG side, absolutely, and it is changing over time. Again, Chinese conversion facilities, yes, emissions are slightly different in China, but we're seeing an acceleration of capacity being built up in the rest of the world. If you look at funding for these projects as well, and to Paul's point, so we participate on a global basis, and we're participating in mining exploration company raisings at the moment as a mining fund or resources fund alongside ESG investors who don't necessarily understand the risks around mining and processing. So the thematic behind the battery, the thematic behind renewables is real, and it's accelerating from where we see.
I think I agree with the points so far. I think the S and the G are kind of have been the real focus to date, particularly from the exploration end, as Paul said, and the DRC has definitely not got the best reputation, despite being kind of 70% of cobalt mining globally. It is improving, but the real focus has been on the S and the G. I don't think there's been a great push for environmental standards, particularly in that part of the world, and in China, as we said. I don't expect it will be a kind of a major push on the market in the short term. I think it's definitely gaining traction in investment decisions, but I don't think it's a deal breaker yet. And I think there's probably some policy that needs to come in to kind of drive that. It will become increasingly important, but with China's dominance of the market, I don't think kind of environmental standards will be a kind of a major factor in the short term.
We've had a question that's come in asking, what would be the ideal policy response from governments to support this sector?
I think that's a hard one.
I know.
Depends on the result you want. It's so do you want a separated supply chain, or do you want the most efficient supply chain? So that's a very difficult question to answer. So if you want a segregated supply chain, then you need incentives for investment. But if you want the most efficient supply chain, then you want to develop the best project in the world with the lowest cost and lowest environmental impact. So it's a very difficult question to answer. Yeah.
I think you need a kind of a robust downstream demand to support the investment, and the best policies that we've seen are upfront incentives for electric vehicles. Where those have been brought in, penetration rates have risen very quickly, and that kind of creates a domino effect of investment and demand in those markets. We saw it in China, kind of less so now, but over the last 3 or 4 years, and that's why EV sales are so strong in China, and it's also enabled great technology development and investment in the market. We've seen it since the start of the pandemic in Europe, with very generous incentives in a number of markets, and as a result, EV sales have boomed. And the US is a little bit behind, but has shifted a bit with the Biden administration. So I think that's kind of that downstream demand has given people confidence to make long-term investments in the sector. And then we also, as James said, we're seeing movements from Europe on emissions policy and battery production, and I'm sure we'll come onto it, recycling policy as well. And that's also really important. But I think people need to see a robust demand outlook. There's still some skepticism about kind of how consistent EV sales will be, particularly in the short term in some of these markets, also when these incentives are pulled back. So once we see that, and there's kind of very robust downstream fundamentals in the kind of the major markets, then I think that will all follow from there.
Some of the questions we get from the clients that we work with are guidance on how to apply for incentives, what incentives are available in various jurisdictions in North America, for example, and it really varies from state or from federal, and so the policies really vary. And then on the other hand, we're also talking to those jurisdictions and advising them on and helping them understand what kind of incentives are most effective and being used elsewhere. And it really does, it does depend on what that government wants, and if they want to incentivize that full vertical integration of their supply chain, or whether that's even economical to do so. It really depends on the jurisdiction, what kind of minerals are available. But one thing that we haven't mentioned, I'm sure everyone's just sort of passed over this one, is it's very easy to forget that, and I think the way it works, and it has historically, is EV companies might set up, the battery company might set up somewhere and then look to their cathode supplier or their precursor supplier to set up nearby and go downstream in that direction. But in order for a cathode or precursor factory to be set up, it's requiring a lot of intellectual property, a lot of knowledge, R&D, and it needs to be close to those R&D centers. And those are all in Asia. Those are all in, mostly in China and South Korea and Japan. And I know the Australian government, where we are, is looking to attract the CAM and the PCAM. And I know WA has said we've got this plot of land for the next CAM producer that wants to come or the next cathode producer that wants to come, you can set up right here. And that's empty land where I don't know how it's possible for the government to incentivize, in that sense, a PCAM or a CAM producer to come to Australia, although it might work in North America, US and Canada. So all those questions are so interrelated. Depends on the goals of that jurisdiction. It depends on what you have as a mineral. Depends as what kind of intellectual property you have available too.
Yeah, there's a couple of interesting points. So Harry's point about EV policy, in effect, that's an enabler. The consumption of EVs enables a local industry to develop, particularly if you're in an industrialized country, and what Cameron was just saying about policy environment. So we're involved in Thailand, and the Thais, their auto policy in 2016 was accommodating PHEVs, and they've got policy now to encourage EV and LIB manufacture there. And part of the driver is to retain their leadership position in auto manufacturing in Southeast Asia. And you see this in the Asian countries. It's more, it's partially about environment and reducing emissions, particularly in some of these countries like China, but it's also about positioning the company for this next phase of industrialization in a way. I've heard it being called, whatever country, Germany 4.0, are these S-curve industries which LIB and EV fit into.
I think Cameron's point is a really interesting one, kind of comparing Australia, where there's a lot of lithium production, to other jurisdictions. And I think where Australia will lose out is the lack of a significant downstream market. There's no major auto producers in Australia. There's currently very poor electric vehicle policy to support downstream demand. So I think Australia will always struggle, I think, to go much further downstream from where they already do. But say in North America and Europe, the kind of major automotive markets where there'll be substantial electric vehicle demand, even in the mid-term, let alone the long term, that will be a completely different equation. But that being said, I agree with Cameron that it depends where you are in those countries. It depends what state you're in and what the objectives of that state are, particularly kind of what energy resources they've got, whether they've got renewables, whether they've got energy incentives in place to support these industries. So it's a very kind of localized question.
Actually, I would add though that you do need sorry, Paul, the EV, the market, being closer to the market and the battery is so super important. Although we've found that in our studies that there are advantages to co-location, and some of them might not be so obvious, very economical, ability to recycle lithium or use heat in this process, in that process at the same time, or things like that. Not so much in terms of transport and emissions. We don't find in terms of our ESG reports that makes a huge difference. But I think that in terms of economically, there are reasons to co-locate, and there could be reasons why you could make your cathode or your pre-cam here in Australia. But like maybe Harry, you're right. Maybe the downstream battery is the need to have those companies involved is just too strong. And the lack of IP and the lack of ability. There's only a handful of companies that have the ability to make PCAM and CAM, and there's only like one or two that are actually looking to expand overseas. That will, well, in the public domain at least. And go on.
Yeah,
Sorry,
that's
Paul.
a good point, Cameron. What will be interesting to see the Albemarle and Tianqi LGO hydroxide plants in WA and how they go and where they end up sitting on the cost curve. But and if they go really well, then maybe that could be a catalyst for PCAMs. But I'm not so sure about CAMs, because then you've got the issue of shipping and condensation and so on. So it could affect your CAM material. So they've got to be close to the auto manufacturer itself.
You have to question how successful they've been, though, Paul. What do you think in terms of the startup there? And I mean, I've talked to the engineers and in some of these projects, and the expertise just isn't there. The ability, the labor, they have to compete at one point with iron ore, and then all the other industries that were paying a lot higher than lithium guys. But there's a lot of competition for labor, and not sure what you think about the success so far, but potentially not optimal.
No, I think watch this space. That's going to be the big question, is what they end up costing. So what the CapEx, there will be a blowout, and what the operating costs are.
Very different to China. And I would say, though, that there are some graphs floating out there and of capacity utilization rates in China, for example, and China can build a lithium refinery in a couple of years, which is nice. And potentially that means that that's not the bottleneck for lithium. But there are always efficiency problems. The efficiency in Australia will have to be higher on an economic standpoint than in China, of course. And there are issues in China with the pyro processing side of things, usually where the bottleneck is. There are other reasons why you build a lithium refinery outside of China, though, of course. And it has to be if you're spending $1 billion more.
Yeah.
Australia's, sorry, just very quickly, apologies. I think Australia has some natural benefits and some disadvantages. So if you look at in terms of where you could locate processing plants or upgrading facilities, what do you need? You need labour, you need power. Now, Australia is not cheap on either of those. So if you're in WA, you're paying 15 or 20 cents a kilowatt hour. If you're in using hydropower in Canada, you pay 4. So yes, Australia's at a disadvantage, but there are other areas of the world that might be more suited as the market develops.
I agree.
So I think it might be good to kind of change pace a little bit here, talk a little bit about battery technologies and substitution, especially given kind of current supply chain issues and investment issues. So we've had a number of questions coming in, kind of asking, about battery chemistry trends that we're seeing. What do you think is going to dominate moving forward, and what sort of substitution for particular materials do you see kind of coming into play moving forward?
I think, well, right now it's really LFP versus NCM, and the market has really been focusing on NCM, or upstream, focusing on producing hydroxide for NCM. But Tesla recently announced, I mean, they're already producing their Model 3 in China with an LFP battery, and they recently announced that they plan to start producing all standard Model 3s with LFP batteries. And I think Tesla's decision there will be a catalyst for other OEMs to look at that. And the price environment for nickel and cobalt will be a big driver there. Why would you use an NCM battery in a small car? They're not used in trucks and buses, and most buyers, when they buy their small car, don't pop the hood and work out how many horsepower in the car or whatever, kilowatt hours. I think that'll be the case with batteries. For most people, an LFP battery will be fine. So I think that's a trend which is happening right now.
I think some of that's the increasing focus on battery technology and efficiency as well. So, Paul, if you look back at LFP 4 or 5 years ago, people were talking about being at the sort of the limits, the efficiency limits of what you could get out of batteries, but they've got better since. Yes, there's theoretical limits in terms of where you can go, and then practical limits. And as the industry focuses, as R&D dollars get spent on development, you start to push the limits. Now, LFP is absolutely getting better, but NCM at the other end will get better as well. And as the market gets better, you'll get differentiation. To your point, you don't need an NCM in a small car that runs around the city, but you might want a high quality battery in a more higher performing car, and that comes with the price tag. So.
Yeah. Soon we'll be talking about what battery we've got in our car.
Well, on that point, like in America, it's not about what you need, it's what you want. And you don't necessarily need a big car. None of us need an SUV to run around town, a Prado, whatever, but we want it.
Do you think that's going to change as kind of more environmental considerations come into play in the general population?
I think it'll be very market specific. So I think the US and to a degree Australia will always want bigger cars with longer range for long road trips, but city populations in Europe won't need that range. But then I guess we can go down the route of charging infrastructure and how that works in cities, but that's another conversation. But I think it'll be very different depending on kind of what region and what environment you live in. I think that the LFP story has been really interesting. It had been written off a couple of years ago that it wasn't going to have a strong place in the market, and it's just come back with real vengeance in the last 12 months, mostly in China from these kind of mini EVs like the Hongguang Mini, which is outselling Tesla at the moment. You can get very affordable vehicles, yes, with lower range, but perfectly fine for someone who lives in a city and doesn't often do long trips. The LFP technology has improved a lot, and some of the patents will run out in 2022, and I expect we'll start seeing even more technology improvement and potentially more production of LFP outside of China. So it could improve even further. They're now talking of LFP potentially getting 400-500 Ks of range, which I think for a lot of people is more than sufficient. It's been helped by the kind of the cell to pack technology improvements. We've got the BYD blade technology, which is also improving energy density. So LFP is about half the market in China at the moment. And then for us, it's really, as Paul said and James, it's really an LFP and NMC story going forwards. There will be regional differences, but it's really a fight between those two chemistries, kind of LFP at the small car mass market end probably, and NMC at the higher end luxury vehicle.
Yeah.
So what kind of products suit? My view is that the product will change to suit the market as opposed to the market change to suit the product. So to Harry's point, you look at the US, the Hummer, the electric Hummers have got a 200 kilowatt battery. That's 2 times anything you see anywhere else in the world, 2 times the biggest Tesla you can get roughly. So the products developed to suit the market wants, as opposed to necessarily the market changing to meet what's that?
On the US, and I think Harry's probably right, as the LFP technology improves. But in the US, a lot of the public announcements in the first phase have been, and particularly prior to Biden and now during this first phase of Biden administration, NCM for that premium market. But now, as you know, as we see more and more people adopt EV in North America, there will be some LFP announcements. Now, a lot of what we track is what's in the public domain. So we can't say, well, yes, NCM in North America is dominant, but that doesn't take into account what we currently don't know, the unknown unknowns. Yeah. It's the same with lithium and the supply gap. So yeah.
And the other interesting factor here is in a lot of Asian countries, the motorbike, moped, and the tricycle manufacturers. And it's all about cost. And these things not only have to go 50 or 75 kilometres. So an LFP battery will move into those. So and I think everyone has touched on this point. It's what suits the environment, and most Asian countries, distance isn't a big consideration.
I think that's a great point, Paul, on the two-wheel market. It's not really discussed, but it's huge in India, it's huge in Indonesia, Malaysia. And kind of we all talk about China, the US, Europe when it comes to EVs or kind of any type of electric vehicle, but Asia will be a huge market. It's just not so imminent.
Yeah. And it will never be the sound when you don't hear the sound of the small bike in the streets. But a lot of Indian companies or Indian manufacturers are making an announcement. And just recently, an Indian group called TVS made an announcement about their new bike and their new three-wheeler. And they're big manufacturers, so it's already happening.
Going with this kind of battery chemistry discussion, we've had a question coming in asking about manganese and why it remains disregarded within the discussion.
Well,
I'm not sure it's disregarded. Sorry, go, Paul.
I was just going to say supply is not really an issue. Actually, I saw a battery chemistry and it was LFM, which I assume the M was manganese. But I don't think supply is an issue, is it?
I think it's. I don't think it's disregarded. I think there's, as with most things that happen over time, is there's potentially better ways to produce battery grade manganese sulfate for to suit the market, but that certainly hasn't been developed yet. So at the moment, effectively, the market is going to physical manganese and then effectively backpedaling to a sulfate or back processing, I beg your pardon. So there's probably routes that will create more efficiencies, which again should extract costs in time. But to Paul's point, there's plenty of manganese in the world. And does it cost an extra $1 or an extra $10 to get to the battery market? I'm not sure, but there's plenty of supply.
Batteries are also a small part of the manganese total market. You can make a similar argument about nickel. Nickel batteries aren't a big shift on the nickel market yet. That will change, but it's still kind of a stainless driven market. Lithium and cobalt aren't the same. If you take away battery markets, the industrial applications are very small as a share of the total market, and in the next 5 or 10 years that will increasingly be the case. So I think that's important to consider, is that batteries are driving lithium and cobalt, but they're still a relatively small part of nickel and manganese.
Yeah, there's manganese is one of the biggest traded commodities in the world, and like 20 metric million tons per annum. And lithium ion batteries make up like 45,000 tons of this max, something like that. So it's really, really small, like 0.5% of the total market. Battery grade metal and sulfate produced by only a handful of producers globally, and only 3 companies outside of China produce these products, and they're all long established. And going forward, demand is forecast to expand significantly. Either these producers will need to expand or new entrants will be needed. About the similar conversations we have with, say, graphite, for example, is really dominated by China, but we still need new entrants. It's not that big. Lithium has a huge supply and demand gap. We don't know where these projects are going to come from yet for 2030 or 2040, but they will appear. But graphite and manganese, they may already have the projects in the works, and maybe if you're an investor, you saw that coming and you're invested in those companies already, but it's not as exciting potentially. But Outside of China, there are still several new projects underway to supply the battery market in particular and specifically. But the existing producers are fairly quiet at the moment in regarding expansions, but potentially they could come. But I'm overall fairly quiet on manganese because I'm usually just the lithium guy. So I'll just talk about lithium all day.
We've had a few questions coming in about other kind of technological innovation, I suppose, in the field, specifically looking at the role of hydrogen and how that might kind of interrupt or impact the battery metals market. Does anyone want to make a comment on that?
I think from a very high level, I think the lithium, it's already out there. There's so much capital investment into battery plants, and the autos have put so much investment into it. I think did Toyota drop its hydrogen vehicle? Well, there hasn't been too much focus on it. I think hydrogen might have a place in big applications like shipping or something, but I don't see it hitting the streets.
Yeah, I agree.
Also,
I think it'll be good for long distance freight, for example. I think there's talk of eventually we'll have hydrogen planes, but I don't think you won't be getting a passenger car anytime soon that's hydrogen driven.
The technology is not quite there yet, and then how do you produce the hydrogen? If you look at the environmental side, are you looking for the completely green hydrogen, or you prepared to take some disadvantages through the process to produce a product that's not quite so environmentally friendly? So there's a lot to develop in the hydrogen market. Definitely interesting, but a lot to play out. And
I think there's more of an incentive to make hydrogen work in more emissions intensive industries such as steel, or steel raw materials. I think that there's more of a push there than there is for electric vehicles, for sure.
And we're getting close to the end of the hour. I still wanted to talk a little bit about the role of recycling and how that's going to take a place within this whole industry moving forward.
I think there's a huge opportunity in recycling. It's exactly the same size as the opportunity in battery manufacturing because it's the same content of material. I think that's quite exciting, but there's a lead time. So it really is, say, 5 to 7 years before it's at scale. And the early movers, can they tread water for long enough? So there's some interesting companies right now which are looking at it. I was reading about a float just recently called Lee Cycle Holdings in the US, which is 1.5 billion market cap with under 10 mil per annum revenues, but it's got a good plan. So I think there's a lot to happen in this space. There's a lot of people looking at it.
It's an interesting point, Paul, because we're really not going to see a big wave of EV battery recycling until probably the early 2030s, given we've only really started to see a ramp up in EV sales in the last 12, 18 months. If you assume kind of a 10 or 15 year average life, then there's not going to be enough scale to support some of these new companies until the 2030s. So as you say, they've obviously got to be there ready and waiting, but if they start too early, can they hold on?
Yeah.
It's also what technology gets used as well. So again, with the very early stages of recycling, if you look at the basics at the moment and simplifying, there's a pyrometallurgical process, which simply is very, very bad for the environment in terms of emissions, which is going to cost you to manage that. Then there's a process which is effectively digesting batteries, which leaves behind what's called a black mass, which is hard to deal with. There's now a process to try and, so if you think about assembling a battery, it's a very complicated chain. There's now companies looking at trying to disassemble a battery and take the individual components out and then start separating from there rather than just mashing up batteries. So who wins? I don't know, but there's challenges on the environmental side as well.
I think that again the policy is going to be a big driver, and they've now mandated that you can't put lithium-ion batteries into landfill in China, for example. But then there's a fairly significant kind of black market for recycling that exists in China. So it's all the kind of the policy and regulation that's going to be a key driver. We go back to Europe that we discussed earlier on about how they're going to look at improving sustainability of both battery production and recycling. And I think it really comes down to, in each of the major markets, what the OEMs are expected to do in terms of collection and recycling of the materials. And I think if we're right in our projections of kind of the supply deficit and a continued price drive, there'll be an economic incentive for the OEMs to recover that material and reuse it in their battery production. But as James said, there's still a lot of gaps in the technology and being able to do it at a reasonable cost at scale.
I think, Harry, you touched on a point there. It'll be policy which drives it, and if the policy is for easier recycling, then maybe the construction of the battery pack itself will be in a way that it's made to pull apart easily, instead of what's been happening now. So, and the policy environment could probably drive that.
But that needs to happen. That needs to happen now, right? Because we're already starting to see batteries become more structurally integral within the chassis of a vehicle to enable mass production, just in terms of efficiency. But that could potentially make the disassembly and the recycling a lot harder. So that you're right. I think that the policy is really important. But if it happens too late, and we've already got kind of an older generation of electric vehicles that aren't suited to or we kind of get a disparity between construction, that could get really difficult.
Yeah, pretty exciting space.
Yeah,
absolutely. Well, that's really brought us to the hour. I think there's there's so many more discussions that we didn't even get to, and we apologize for all the attendees that ask questions that we weren't able to get to. We'll certainly do some follow-ups, especially regarding the lithium space. I think there's quite a lot more discussion that we can have there. But I don't want to take up anyone else's more time from you guys today. So I'd like to thank everyone for participating in the webinar today, and we hope to see everyone at a live event live events hopefully happening in 2022.
Thanks, Amy, and thanks, James, Cameron, and Harry. Really good to talk with you.
Thanks, everyone.
Thanks all.
Yes.
Cheers.
Thanks all.